Hey everyone, welcome back to my channel. Now in today's video I'll be going over the market cycle. I've been getting a lot of questions lately and people are asking, Luran, when exactly is the best time to buy stocks and when is the good time to sell these stocks? And the short answer to that question is, guys, knowing the market cycle. Now the smart money, they know exactly when in the market cycle they need to purchase stocks and when they need to sell stocks. So there's 4 stages in the market cycle, guys. And if you understand these 4 stages in the market cycle, you'll be on your way to making top returns on your investment, whether you're a short-term investor or whether you're a long-term investor. So what exactly is the market cycle? I like to look at the market cycle so there's a larger cycle which lasts for about 8 to 10 years, where the market will go up for about 8 years to 10 years, and then it will fall due to a market crash or some major economic activity taking place. There's also a shorter cycle, guys. There's 5 years, 3 years, 1 year, 3 months, 1 month. The market is basically just experienced a crash and it's at the bottom. So during the accumulation stage, the market will be going basically sideways and has bottomed basically from a big crash. So let's say the market crashed 30%, for example, due to COVID-19 back in February. The market crashed, I think 35% overall stock market. I think the S&P 500 and the Dow crashed about 35% on average. And the market just went flat for about a couple of weeks, and then the market went ripping higher again. Now the accumulation phase is known as the best phase for purchasing stocks, guys. During this phase, retail investors or the people who are novice investors, they're not trying to get into the market because the news, CNBC's, Bloomberg, they're all telling you that the market is crashing and we're not sure if it's the bottom as yet. So everyone is scared to get back in. But the contrarian and the smart money investors, they're usually buying the stocks up when it's in the accumulation phase. So the next time you see a market crash, guys, and the market has gone flat for a little short period of time, just recognize that as the accumulation phase. Once you see that 35% is hit, that's a big crash. And once you see the cycle is exceeded, let's say, the past 8 years or 10 years was the last time you had a major crash like that, you want to start buying the stocks up. So that's the accumulation phase. The next phase in the market cycle, guys, is called the markup. So after they accumulate the stocks, they mark the prices up. So that's where the stock comes out from that range. It might be in a range for a couple of weeks. It'll break out of that range and it'll start to go higher. That's also a great time. Let's say you missed the accumulation phase. Just as it breaks out from that accumulation phase, it's called the markup phase. You want to get into the stock market during that time as well, because it's a time where the market will just go higher, significantly higher for several months. Depends on what, length of cycle you're looking at. And then from the markup phase, the market goes into what we call the distribution phase. So the distribution phase basically means that the markup is over and investors are looking to take profits. Now, investors don't want to take all their profits at once, because if they do so, the market will just plunge right down again. So what they'll do, they'll take profits gradually. They'll buy, they'll sell a little bit, and then everyone else will jump back in the market and push it higher. But it'll just do that in a range, very similar to what I talk about in the accumulation phase. Just that the difference between the accumulation phase and the distribution phase is that the accumulation phase is at the bottom after a crash, and the distribution phase is at the top after a big run-up, or the markup phase. So we go into the distribution phase for a couple of weeks to a couple of months, depends on the cycle that you're looking at, and then the market will fall again, what's called the markdown stage. Now during the markdown stage, investors are just cutting their position like crazy because they already made a lot of money from the accumulation and the markup, and then they distribute it and then they sell it off in terms of the markdown phase. So those are the 4 key phases of the market cycle I just explained to you there, guys. There's the accumulation phase, there's the markup phase, there's a distribution phase, and then there's the markdown phase. If you understand those 4 concepts, guys, I'm telling you, you'll be in for a treat when it comes to trading in the stock market, because that's what the smart investors understand, and that's what they use to purchase stocks. Like I said before, there's multiple cycles or length of cycles you can look at. If you're a long-term investor, you might be looking at that 8 to 10 years. But for me personally, I don't look at that long of a cycle. I look at it, but that's not what my trading is based on. I trade mostly the 3 years, the 1 year, the 3 months and the 1 month cycle. I look at those cycles. And the market will correct itself in two main phases, guys. There's usually a crash or there's just a correction. So the market will be going up all the time, and it might be insignificant news and you see the market is pulling back. Usually a correction will just be between 12 to about 20% pullback, and then the market will wedge itself and then move higher. So you need to understand technical analysis. So that's something also I encourage you to do some reading on, technical analysis. And once you understand technical analysis and you merge it with the market cycle, man, it's game over when it comes to investing, because the charts tell you everything. Not the news, not CNBC or Bloomberg. The charts tells you everything that you need to know about the market. So that's what I wanted to talk about here today, guys. A pretty short video. At the end of the video, I'll show you guys a graphic of the market cycle. You'll see multiple phases in the market cycle. You'll see some mini cycle in the larger cycle. And also in the description in this video, I'll drop some links to Wikipedia where you guys can do some further reading on the market cycle, and you'll definitely take your trading to another level. One of the articles I was reading that I got from one of my subscribers is, he said every time he purchases stock, he's buying stock at the top, and then before you know it, his portfolio is down or is just going sideways and he's not making any money. Not understanding the market phases tells me that my subscriber is more or less buying the stock at the distribution phase or the markup phase, like way on top. So when he's purchasing the stock is now primed to just go lower. So you need to buy in the accumulation stage. In summary, guys, the best time to purchase the stock is in the accumulation phase. Now, in the distribution phase, if you're a more sophisticated investor or trader, you want to be selling stock. You want to be shorting the stock or buying puts, for example, if you're into options like I am into. So I won't get into that into this video, but guys, let me wrap things up here. I'm rambling a lot. I just want to tell you, you want to master your entries and exit in entering the stock market. You need to understand the market cycle. And the four phases of the market cycles are accumulation, markup, distribution, and markdown. Best time to buy stocks, accumulation phase. Just after the market has crashed, you want to get right in there. You might not time the bottom perfectly every time, but getting in there and holding the stock until it recovers into the markup and distribution phase will definitely get you paid. And one other tip before I let you go. Don't try to be like Warren Buffett and those guys. Those guys bought stocks decades ago, and that strategy isn't working now, where you just buy a stock and just hold it until retirement. You need to get in and get out, guys. You need to buy stocks in the accumulation phase, sell them in the distribution phase, rinse and repeat, because the market goes through cycle over and over. So just after one cycle is completed, the next cycle starts. So you're able to get right back in and do that over and over. And if you're doing that on a 1 year cycle basis, you'll be able to get in, hold your stock for about 6 months, get up to the top in the distribution phase, exit that stock. You might sit on your hands for a couple of months until another accumulation phase comes up for the particular stock you want to trade. You get in, get out, rinse, repeat, and that's how you make money. So I'll wrap it up here now with this video, guys, and I hope you guys took something great from this video. If you enjoyed this video, guys, drop me a like, smash that like button, guys. Leave me a comment if you have any questions about this video or anything about investing. And also, if you're new to the channel, remember to subscribe, guys. So until next time, I'll catch you later.